Aloha, everyone. The stock market staged a bullish session on Friday. However, how bullish was it? Well, you can see that the NASDAQ, QQQ, I should say, closed basically where it opened. So if it wasn't for the gap up, leaves a lot to the imagination. Still below the 50 SMA. So the 50 SMA reclaim methodology is still not in effect. And on top of that, the oversold to not oversold reversal methodology did not trigger because even with today's 1% gain, as you will see later on when we look at telechart version 22 charts, we are still oversold on that ETF. But with the QQQ bounce, how does the SPY look? The SPY, pretty nice, right off the 50 SMA. That being said, volume was lower. There is an intraday reversal off the highs, so it leaves a lot to the imagination there. Better yet, though, the DIA looking good. Nothing really problematic here yet. I love that relative strength line on the bottom of the screen, but more importantly, the IWM, IWC, IWM, IWO. Look at the relative strength lines since the beginning of July. Beautiful, beautiful, beautiful. I don't know if we're clear and ready to launch yet. Hopefully we are. It would be great. I like the universal move in the stock market today with all the indices that I track being up, including the ETFs. But the IWO is still range bound. The IWC is still technically range bound. The IWN is breaking out a little bit while the IWM is range bound. The IWN is value stocks. Value stocks have taken the lead of growth stocks, and that can be evident looking at the IBD 50 ETF. And if you look at that relative strength line, not too pretty. I really like it when everything, the ETFs that I track, like let's say the IWM was doing this while the FFTY relative strength line looked like the IWM relative strength line, I'd be super happy about the overall move. But with the QQQ and the SMH, with the rotation that we have, and we're going into very negative seasonality, August, September, the two worst combined 2-month period for stock market returns is September, October, the first half of October, but August is when the pulling normally starts. If we just look at the QQQ, you can see that back here before that downtrend in 2023, August is when it really started. And you can see back in 2022, August is when it started. Started a little bit early this year in July. We'll see if there's any follow through. But overall, I am still happy with what I'm seeing. I like the breadth growing here. The XLF looks good. XHB looks fantastic. Look at the relative strength line. Who are our leaders? Clearly, it's going to be the home builders. XLV looks good. XLP, XLU. So it's a broadening out. I'm open-minded. I'm still a secular bull. I believe that we're in a cyclical bear possibly until we're through the negative seasonal period. I'm going to remain on the cautious side unless the setups are great. And right now, we don't have any great setups. I got two good swing ideas for Monday session, but I want to make a caveat with the main one, which we'll go ahead and go over, CRAI. They have earnings on August the 1st. So this is one that you're going to want to see work immediately. And even if it works immediately, if it doesn't produce huge gains, you might want to pare it back. But overall, I love the stair-step nature of this chart. I love that whenever I get more granular with the Zoom 4 charts, what they call it, the relative strength line goes from the lower left to upper right. Love today's pocket pivot point signal within this long basing consolidation pattern. This is a weekly base. You can see how tight it is. I have a candle over candle, heavier above average volume, and this is actually a volume truncation session on the Zoom 4 chart, which makes all the previous tall volume bars look smaller. Bop, nice little surge, but I would have loved to have seen this level break above that high here to really have conviction in this trade. CRAI also doesn't have what my preferred sales growth is of 30%. I believe it's around 12%. It did beat on the top and bottom line in the most recent ER. There is no red balance of power in this chart. So I like it, but I don't love it because it doesn't have that 30% sales growth. Also, with today's volume surge, look at what it did today, 96,000. So it averages only 40,000 shares volume. Good luck getting size in this one. So I'm not going to get stupid with this one. I'm not going to increase size after today's session on this one, especially with earnings coming up on August 1st. But with what I do take, the game plan is to get long above the high of the day, 183.88 at 183.89. Use a 1% limit offset with my good to cancel buy stop limit orders. I'm going to calculate my size from this low, but my final stop will be the uptrending 50 SMA. So if I get triggered in, it fills, it will have an attached stop below the 50 SMA. These setups always have a higher odds of triggering, filling, and failing immediately because it's so close to my risk level. That's why in this tape, I'm using this low instead of calculating my size and risking to the 50 SMA. Also, tree. If you look at this, beautiful. Since this October low, relative strength line, lower left to the upper right, perfection. Real estate name, remember the home builders, so I like this. Earnings winner, they beat on the top and bottom line. Sales growth is around 15%, but it's still not that magic number 30%. Also, this one is extended from this 50 SMA. So I'm going to still go ahead and use the high of the day as my trigger point. I'm hoping kind of maybe it consolidates sideways and then gives me a better signal that kind of looks like this, but like more around this 500 EMA or the 50 SMA if it can catch up. But if it doesn't, if it just wants to run now, I want to get long above 59, calculating my size from the consolidation low while risking to the 50 SMA. And yes, that's going to give it room to work. So I'm not going to get as much size in this as I will CRAI. But, you know, candle over candle, heavier above average volume, pocket pivot point signal, mini bop surge. Once again, wish it was over the previous high level, but what are you going to do? Relative strength line. It's beautiful. That's why I got to at least take this trade. But like I said, once again, with CRAI, which is very thin, doesn't trade like it's thin, but it is very thin. It doesn't have that sales growth of 30%. Earnings are coming up. Tree doesn't have growth of 30%. So I can't push significant size. And even if you do have growth of 30% and you have a consolidation pattern, remember APPF we were talking about, how at least it had a squeeze, had growth over 30% with sales, beat on the top and bottom line their most recent earnings quarter, broke out, but had earnings coming up. Didn't really trust it. Today, you can see the failure. So keep that in mind as we move forward. So this is the daily chart of Tree. Everything looks good here. Triple green coming out of a squeeze firing, but we're already into it. But in the weekly consolidation pattern, you did have a squeeze with the breakout. So this one I have higher hopes for than a lot of the other ones. Now, CRAI, we coming out of a squeeze. Proper progression. Green to gray to red to yellow to red to gray. Now we just need the green firing. But once again, we got earnings coming up. On a weekly chart, though, we don't have a squeeze. And that brings me up to like KEX, which was one that I liked that did not have a squeeze. No surprise that it broke out and failed. A recent name that we just went long was THC, but in its weekly chart, it didn't have a squeeze either. So it could always fail, but it also doesn't have the 30% sales growth. So for the 30% sales growth, stocks that are consolidating and in a weekly squeeze, right now I do not have any. So there are no candidates currently, which is why this one, which is loading still, is empty. Now on the swing side, I was telling members that if this QQQ, now that it's oversold, can get out of the oversold level, we can get long. It's got to be a green bar like today. So today was good. Today would be actionable above the high of the day, risking to this low on this trade idea. If that relative strength line would have closed, RSI 14, if you look at the lower left, you can see it says 27.97. If it would have been at 30.01, it's actionable. It was not. It's not actionable. And for now, even with that bounce, the TTM trend momentum is lower. I'm triple red. So there's nothing telling me we can't just continue to move lower here after just consolidating around for a little bit. SPY, same thing. Triple red, downtrend is real. Not downtrend is real. Downtrend is in effect because we don't have a slingshot where a light red is producing so that we can try to get part of that 13% reversal. So we're not there yet on the SPY. We're not there on the QQQ. IWM obviously uptrending, nothing to do here. But you will notice that when it was in a consolidation, when it had that squeeze and it fired gray, then green, it worked and is still working. So that's why I trust this combo of indicators. They're just tertiary guideposts, basically. The moving averages are secondary, price is primary. But I just wanted to show everybody we're not there for those ETF methodologies. So with QQQ, let's say next week sells off a little bit more, but we get a green day where the TTM trend momentum is flipping after we get from oversold, reclaim that line. QQQ, game on. We get long via TQQQ using the QQQ as our guide for stopping out. If we got long today, this is our line in the sand, the 100 SMA, which lines up with the low of the day. That is not the case, so no trade. All right, everybody, have a wonderful weekend. I'll see you back here on Monday. Remember, CRAI, it's thin, nice setup, but earnings is coming up. Tree, I like, but it's a little extended. Odds of it pulling back is higher in this market.